Hey guys, it's Roberto. In this tutorial, I'm going to go over a very simple strategy that I use on a day-to-day basis. Oftentimes, it's a counter-trend trade or a retracement trade, but usually it's a trade in the continuation of the trend. So let me just get started. On this trade, I'm just going to be focusing on this pound yen Thursday and Friday. Number one, what I do is I count the number of pips for previous day. That gives me an idea what the market's going to put in the next day, a projected range. So about 166 pips, give or take 20 or 30 pips on daily ranges, projected range. So on Thursday, I noticed the market put in about 166 pips. So that's my projected range to the upside on Friday. So a trade was taken going into an Asian session, and it went up about 130 pips, and I noticed that after the European session closed that the advisory indicator was giving me a sell signal. Stochastics was overbought, and my settings on stochastics is 14, 5, and 3. Okay, so that's 2. The daily range, it's pretty much put in its daily range. That's number 1. Remember, give or take 20 or 30 pips. The previous day, 166 pips. And on Friday, 130 pips, so that's pretty close to its daily range. So I'm looking to get out of that trade, and I exited the trade up here. And then I'm looking for a counter trend trade. Stochastics is overbought. 2 lines on stochastics are crossing to the downside. But I need a candlestick pattern, and I need a resistance level. Okay, so far, how many reasons do we have to sell? We've got 1. Advisory indicator giving us a sell signal. I also would add the Bollinger Band, and price closed outside of that upper Bollinger Band, so that's good. We have a hammer, we have a spinning top, and then finally the confirmation candle, that bearish engulfing candle, that was my sell signal. So that would be, the entry would be on the next candle, and this went down quite a bit towards the second part of the New York session. Okay, again, continuation pattern. The market put in its daily range of 166 pips on Thursday, so I'm looking to buy on Thursday, rather on Friday, but exit that trade when it gets very close to the previous day's daily range. And then towards the end of the New York session, or very close, actually this is after the European session closed, we have strong candlestick patterns indicating a retracement. 2 lines of MACD cross to the downside, but MACD is a lagging indicator, so I don't really rely on this because market had moved quite a bit before these 2 lines crossed. I rely mostly on stochastics being overbought and a candlestick pattern. And it was a nice move to about 100 pips to the downside. Let's look at some other pairs. Here is the Euro New Zealand. Now this one was a little bit tricky because I expected this to continue to the downside, and it didn't do that. It just recovered, gave us a nice divergence on a 1-hour chart. So when you have divergence, then you can still use the projected range, but going in the opposite direction. So the market sold off 133 pips. Initially, I had taken the trade to the downside, and I realized it was not going to penetrate the support. We had a nice divergence, so I reversed my position. So I'm looking for the same amount of pips. So the market sold off 136, give or take 30 pips to the upside. Buying opportunities down at these levels. The market, look, went up all the way up to 111 pips. Okay. So when it reached this level of resistance, there was notice the support levels turned resistance up here from Thursday. Inside bar, stochastics is overbought, and price needed to break this level of support, and that would be a good trade. Now I haven't taken this trade, I'm still long on Euro New Zealand, but that's based on the 4-hour divergence, which I'll show at another video, looking at strong divergence setups on 4-hour and daily charts. But this is A very simple, use 4 or 5 reasons to take a trade. On this buying opportunity, we had divergence, we had railroad tracks, inside bar, stochastics was oversold, and a nice run up for 100 pips. Remember, you need 3 or 4 reasons to take a trade. You need candlestick patterns. If you are using the FX advisory indicator, that's 2. Stochastics indicator is 3. In this case, we didn't have, we had divergence, which is just as good as overbought, oversold conditions on stochastics. Here we're looking at New Zealand dollar, and again, 3 or 4 reasons to take a trade. First, I count the number of pips of Thursday, 39 pips. So that's my projected range. So I was looking to buy at the bottom, and this trade did not work out. It just stopped at 23 pips, and this totally turned around and went the other way. So exited the trade, and I notice again, count the number of pips from the previous day, 36 pips, and I'm looking for 36 pips to the downside. So we have a hammer, we have a spinning top, another spinning top, we have a false break. So the combination of these candles pretty much is telling us the market is not interested in, there are no buyers at these levels and bears are taking over. Stochastics is overbought, that's 2. So 3 is the projected range. The market had already put in 27 pips to the upside. So it's about, not, 40 pips the day before. So close to its daily range, but not quite. Okay. But as long as we have candlestick patterns that we can recognize, telling us that the market most likely is not going to go up any higher or lower, then we can take a counter trend trade, and that's what happened here. I actually exited into this trade way too late, and I'm hoping for this to go even lower. But again, this was the entry up here. Hammer, stochastics is overbought, spinning tops, false breaks, everything here. We have a combination 4 hours of candles essentially telling us that the market is finished and it wants to turn around and head south. And that's what it happened. Now, of course, you need stochastics to be overbought when you have candlestick patterns. Stochastics needs to match the candlestick patterns or support the candlestick patterns. So anytime you see stochastics is overbought, look for candlestick patterns telling us that the market most likely is going to retrace, and that's what happened here. Okay. Let's look at some other pairs. Here is another great trade set up on Canadian yen. Thursday, market rallied, so I count the number of pips from the swing low to the swing high. 62 pips. So that's my projected range to the upside on Friday. So a trade was taken on Friday and the market rallied almost the same, 59 pips. So once it reaches that daily range, I'm looking for taking a trade in the opposite direction, counter trend trade. So I noticed that once the daily range was met, there were several candlestick patterns on the 1 hour chart indicating to me that yes, this is not going to go up any higher. It's already done its daily range. We have several wicks. We have tweezer tops here. Look how many candles, 1 hour, 2 hour, 3 hour 3 hours. The market cannot penetrate 85.76 area. Then I needed a decisive, I needed an alert telling us that this is going to turn around and head south, and there it was, is that bearish candle closing below the spinning tops. So a series of spinning tops with one candle closing below or above would signal my trade. And there it was, and I enter on this second candle. Market went down about 49 pips. Now notice the daily range on this from the swing high to the swing low, 74 pips. So pretty much it gave everything back, but it's the daily range. The market went up, giving us a daily range, reversed, and again, about the same amount of pips to the downside as to the upside. Okay. So that's it for the tutorial. Remember, You need at least 3, 4 reasons to take a trade. Previous daily range is important. That gives you an idea what's going to happen on the next day. Stochastics indicator 14, 5, and 3. Make sure the stochastics is overbought and oversold when you decide to enter a trade. Bollinger Band, or the FX Advisory Indicator, will give you support and resistance levels, and the most important is the candlestick reversal pattern. So here on pound yen, we had the advisory indicator overbought, giving us reversal candlestick patterns. Market pretty much has put in its daily range, and the advisory indicator is giving us a sell signal. Okay, so thanks for watching. I hope everyone has a good trading week, and if you have not joined our live trade room, the hours are from 8:30 to 11:30 Eastern. We are hands-on. We've had a great 2 weeks, or rather week, of trading. So please join us if you're not part of the trade room. It's only a 3-hour window of opportunity. So many trades can be taken between 8:30 and 11:30 a.m. Eastern. Okay, thanks for watching. Have a good week.